Awesome. Well, welcome everybody to Owen Forward.
So
We're really excited to have a really fun day today. I think I'm particularly tickled that we've got two classmates for the class of '97. We can do a rapid fire thing about what they remember about each other from that time.
Oh, please don't.
No, please don't.
All right.
We'll leave
for
that
the record.
alone, right?
For the record, he's
We'll
a much nicer guy than I am. For the record, I don't even want to compete with it.
But I think that it really does show just an exciting time for the school and what's happening with our alum. And first, next to me, Rob Louv, who's the co-head of the technology group at Houlihan Lokey. And Rob has had a career that, when he left Owen in '97, was on that investment banking track the whole way through various and sundry internships, bootstrapping, eventually co-founding his own firm, Arch Point, and then selling that to Houlihan, and now is in a really interesting spot of the tech banking world, and then next to him, Paul Jacobson, and Paul has had a career that is really a two pony career. A long run at Delta, starting out of finance at Owen and going into the finance track at Delta, and spending a long arc working his way into the CFO seat at Delta, and there during a really interesting time of the kind of deconstruction and reconstruction of Delta, and now since December of 2020, the CFO at General Motors, and what a interesting time to be at GM, right?
Sure.
So I think it's just going to be a lot of fun, and so I'll give each of you just a couple minutes. Two minutes each or something. Give me the career arc. I kind of gave a little piece of it, but
I'll let you go first.
Paul,
I mean, you only have two companies to talk about, so you should be like that. So
yeah, that's the same 26 years. Thanks for that, Eric, and thanks, Rob, for being here. It's a great honor to be back at Owen on this soggy day. I was telling Rob that my second daughter, we just did a tour outside, and it's really cold and really wet, and the tour was an hour outside. So fortunately, I got here with time with a change of clothes. But as Eric said, I went to Owen really for one reason, and that was to get a job in the airline industry. It's kind of all I wanted to do. The late, great Peter Verrucki, my favorite line ever, spent 2 years trying to talk me out of it, saying it's a terrible business. And we managed over a period of time to turn it around and really get it completely reinvented in terms of customer service, how customers perceived us, running on time, and really turning it into a stellar brand. And then COVID hit. I had actually just prior to COVID announced my retirement from Delta. I was ready after being CFO for 8.5 years. I was ready to go think about private equity, do something a little bit different. I had achieved everything I ever wanted to at Delta. And as I said at the time, I was blessed with the career of a lifetime before I was 50 and had the opportunity to kind of go do it again. Then COVID hit, and we ended up leading the team that raised over $35 billion in about 6 months to help keep the company afloat while it did the restructuring. Everybody thought at the time that COVID was about a 2-month exercise, and here we are quite a bit later, and we're starting to get into what I heard somebody coin the other day as revenge travel. We're all going on vacations as our personal revenge against COVID, and having been at Disney World last weekend, I can assure you half the country was at Disney World last weekend, so that's really true. When the opportunity was presented to me to go work for General Motors, I had a chance to really spend some time with Mary Barra and the leadership team there, and I was hooked instantly. There's such an incredible transformation, and the way I've described it to investors is the airline industry and Delta transformed itself within a mature industry and really differentiated itself. What General Motors is doing is transforming itself inside an industry that is also going massive transformation. So it's not very often you find an industry that goes from maturity back to growth stage, but that's exactly what's happening in automotive, and technology is a huge piece of that story.
That's great. So my story is a little bit, you're going to see that I take the road less traveled quite often. So my background is when I came to Owen, I wanted to go into investment banking. I mean, that was really what I came here for. Now, I thought I was going to end up at a regional Southern firm because I'd never been further north than DC in my entire life. So, but Peter Barucki. Basically, I went into the career office and I said, hey, I want to be an investment banker. And these are the Southern firms that I want to work with. By the way, I was born in Nashville. So, it was natural for me to come back home, as it were. And Peter said, well, if you get an internship in New York, you can write your ticket for a regional firm. And so, and what you're going to find, my career advice again is, I do what I think would be fun. By the way, no strategic vision, many times no tactical knowledge, just I think it'll be fun. So Peter basically gave me a couple alumni names, and I war dialed them until they got me an interview, and I ended up getting an internship in New York, parlayed that offer into a position, full-time position in New York, was with JP Morgan for almost 8 years, doing their mergers and acquisitions. And I started off in New York doing large private equity firms, like KKR was a core client for me. And then in the mid 90s, when telecom deregulated, those large firms that I was working with, they raised multi-billion-dollar telecom funds, which also opened up technology. And so my practice morphed naturally away from just kind of pure large cap execution of M&A towards a domain. And I am a kind of ask for forgiveness, not permission type of guy. I know Paul would agree with that even back in Owen. And nobody was really covering software because software doesn't use a balance sheet, and JP Morgan used its balance sheet very effectively to win business. So I wish I could sit here and tell you there was some kind of strategic vision that I knew software was going to eat the world. There was just no senior banker there, and I wanted to build my own P&L. It's just that simple. And then JP Morgan bought an investment bank called Hambrick and Quist in San Francisco. I was one of the few guys that could spell software in New York, so they said, hey, why don't you go out there and try to build something for us? I did that. It was a great experience until .com implosion. I've built a couple investment banks, and unfortunately I've had to rip one down. I fired 90% of the people in that office. I will never do that again. I will retire or resign before I ever have to do that again. But then rebuilt it 2003 and really found myself in a position where I had built a practice that looked and felt more like Hambrick and Quist, kind of an emerging growth investment bank practice where we were doing average kind of $300 to $800 million type sell sides. And we were in rotation for the $1 billion deals. But for a lot of my deals, I'd have to take the red eye from San Francisco to New York and explain why we should take this deal on. So it became clear that one of us was in the wrong business, and it was me. So I resigned. It took a couple of weeks. And I went to a firm called Montgomery. I had to do a little bit of house cleaning there. They had just raised money from Tudor, but it was a kind of a brand new platform. Built that up, ended up on the board, and then you'll see that again and again, there's really inflection points that force me to make a decision. I am an incredibly loyal person. So when Lehman imploded, just after a couple quarters of monthly board meetings, it became clear that I had a different view on how to run an investment bank through volatility, right? You got to remember, I had a lot of experience with volatility, unfortunately. So I resigned and decided with a 1-year-old and a limited bank account to start my own firm. Kind of built that up on my own. And then before selling to Houlihan Lokey, what really happened is much like my clients, I started to see that I was at a strategic inflection point. And so I was going to go out and raise capital for the first time. I never raised capital. And I was going to build out a platform that would add on healthcare and add on services, because I was really just a software M&A and equity private placements firm. And I also wanted to add professionals to do the equity and the debt. Now, so I think it would have looked a lot like Robertson Stevens, Hambrick and Quist. It was really going to be kind of a regional but focused full product investment bank. Before I did that, I took my own advice. So when entrepreneurs come and they talk about, hey, we're about to raise money, I go, look, we'll go out, we'll talk to investors, we can get you the best term sheet, the best deal, but also let us go talk to a handful of strategics, because if you're starting a business or you're running a business, you're not in the risk taking, you're in the risk management business. I know Paul as a CFO knows that probably better than I will ever, just because all the exposures he has to manage on a daily basis. But what you really want to do is manage that risk, not take risk and not be rewarded for it. And so it took about a year to negotiate, but Houlihan Lokey gave me everything I wanted, and took some risk off the table, and it's been a great relationship. I will tell you, I mean, I can't believe that I've enjoyed being a W-2 for this long, because it's not natural for me, but the firm's got a great culture. I answer to the CEO, and it really is an entrepreneurial organization. You still build businesses within that U.S. tech, or now global tech practice, but it really isn't. And at the end of the day, what really I enjoy about the business now is really the strategic pieces. Like, where do I want to spend time? And when I say software, you probably think of one large mature market. I think of 22 sub-markets. And so I'm constantly trying to think, where do I want to, me and my team, where we want to spend time so that we can be effective strategic advisors. And also my background, after I left JP Morgan, I say I'm an investment banker, but really I'm a merchant banker. And so I will put my own money into deals that I do. And so my thought process absolutely is one of a strategic advisor, but it's also as a principal. And so I think that brings many times a unique perspective, and it creates a much stronger relationship with the private equity firms that are out there, because when I talk about the business, I talk as though I'm a principal. I don't talk as though I'm an agent. So that's been a slight variance that I think's been able to allow me to build stronger, longer relationships with the private equity community versus just trying to push out every deal that you can. I actually will turn down transactions. So yeah, feel free. I know. Let me get the other laugh is he'll love this. I also am I'm an ethical investment banker. Please laugh now. That's even bigger joke than before. I know he's chuckling and he's being polite.
I'm thinking in my head.
Exactly. It's kind of like a unicorn. So it's the same concept. So
I've heard about you.
Exactly.
I mean, both of you, technology's played a big parts in your career. How do you think about that? I mean, Paul, now GM is a technology company, right? I mean, I never thought about that 20 years ago, right? But
yeah. That makes two of us. It is uncanny how fast the world is changing. And that's something as I've gotten older and gotten into my career, really understood that pace of change. And, I went from, I was just talking about this with my wife the other day. I went from coming out of Owen doing PowerPoint presentations and Excel models. And now I don't know how to program in Excel anymore. Completely forgotten it. It's changed. It's passed me by. And it becomes about leadership, and it comes about seeing around corners. As Rob said, risk management is such an important piece of it, right? Because if there's anything that the pandemic teaches us, you will go bankrupt trying to prepare for everything that could happen to you, right? Yeah. It's about seeing around the corners, and it's about understanding the macro trends of what's going to happen. And technology is a huge piece of that, right? Technology would eat the auto companies alive if they didn't adjust, right? So that's when Mary, who took over for GM in 2014, realized pretty quickly that there needed to be a transformation. And most people don't know that GM actually had one of the first electric cars out there, if you remember the Saturn EV1. It was before its time. The consumer wasn't ready for it, and it just kind of moved on. And now it's back with reckless abandon. I mean, we're going to have 30 EVs out by 2025, with over 20 of those in North America across all price points, off a single sort of battery platform integrated with a software in the vehicle. So your vehicle in the future is going to look more like an iPhone on wheels and function more like that than ever before. And that's where the growth opportunity comes in. So when you think about what the consumer sees and what the capability of data, I mean, we are on the verge of actually creating autonomous rideshare in San Francisco. We've got a subsidiary called Cruise, and they're actually already giving unpaid rides to the general public in a small subsection of San Francisco, no driver at all. And, this is one of those things that people have said, I don't know how to think about that. That feels dangerous. If you listen to some of the technology ethicists, they're like, well, at some point the vehicle's going to crash, and did it decide to do that, whatever. You hear all that. But I heard it actually described really well by Mary, who took a ride several weeks ago. She said, imagine getting into an Uber or a Lyft. Your driver is paying attention 100% of the time, not thinking about his or her family, not thinking about the tip you're going to get, not looking away, not glancing at a phone, not eating, not drinking, and is aware of everything going around 100% of the time, 360 degrees around that vehicle. Is that a driver that you would want? And the answer is yes, and that's what autonomy is doing. And it's going to be here very, very soon in terms of spreading out over time, and we'll see it. And that's going to solve emissions problems because they're all electric vehicles. It's going to solve congestion problems because they just drive more consistently than humans do. But that's the pace of change. And, 20 years ago, we would have thought this is coming from the Jetsons. Y'all are too young to remember the Jetsons, but you know the Jetsons.
Of course.
And at the end of the day, it's here and it's coming and it's faster. And we're already thinking about what's next after that. How do we get into personal autonomy and things like that down the road? So it's just amazing how fast and how impactful these changes have been over time.
Wow. And I mean, just to add to that, Rob, I mean, we're talking about technology, but, so much of technology gets developed in these smaller companies that end up passing through your hands to a GM or an IBM or whatever. How do we think about that process?
Yeah. Well, so let me add to that one. One thing I'll say is this is just to frame it, because it's really he has probably one of the most interesting strategic challenges that any company faces, because I'm going to talk about how software is eating the world and how it changes things, but think about this, is that it's such a fundamental change in the software it's going to be able to create that the form function of the car will have to completely change, right? Because the priorities of designing and engineering a car completely change if you take the driver out of the equation, right? And this is something that we spend a lot of time with our industry talking about, like, what will it mean? Like, will it basically be a kind of like a traveling hotel room, right? Because what's the most comfort in the back? But the software, it's a great example of how software is going to change the entire form factor of the hardware. And that's something that I think is really unique. So, and by the way, my analysts only send me PDFs of Excel as well, so I'm not allowed to touch Excel at all. So when going back to your question, the idea here is, first and foremost, when you think about early stage startups, right, and I keep talking about manage, not take risks, is we have a bit of a winner's curse. And what by that I mean is you get to hear about the Facebooks, but you forget about the MySpaces. So I actually sold MySpace to Fox. That one is a good one for me to always do the comparative on. But it's not just MySpace. Like, also Google. I mean, for 5 years, VCs would not invest in anything. Like, VCs ran away from funding Google. That's why it was funded in a garage, because there is so much risk in the startups, especially in emerging areas, emerging technology. And so what I always try to do when I'm trying to underwrite a smaller company or an earlier stage company is I think in terms, and I'm not smart enough to think outside of three main drivers. So you'll notice my advice always almost goes back to three things. So 3 risks to every company, and fundamentally, there's the market risk, the product risk, and the execution risk, right? And so where the risk, you can really underwrite the risk as a banker like myself or an investor, is the market has been defined. So you have a general idea of what the total addressable market is and what the growth will be, right? That's saying a lot. I mean, because what you don't want to do is have a great company in a small total addressable market. That's going to be very hard for you to be successful unless you want to just have a mom and pop shop. But that core, that's the first step, is really got to understand that market and where is it on the development, and is it going to face headwinds or tailwinds, right? The second piece is the product. The product side is, if you have a pilot with McDonald's, I would argue you have not removed the product risk. But trust me, there are a lot of entrepreneurs that will say completely different, right? They'll try to say, look, we've launched at scale. But if you still have that product risk, meaning I'm not even talking about yet the competitive side, will the product deliver what it says it'll deliver, right? And going back to the market, is there a market demand, right? And that's why when you think about Steve Jobs, I always think in those terms, because he was so brilliant at being able to understand those two early on, right? And then the final piece is the execution, and that comes down to guys like Paul. Is the management team strong enough to be able to execute through. And the other piece with a lot of startups, what happens is, a good example is I'm a much better executive growing businesses, right? But at some point, I start to say, hey, I want to go back to doing the deals. So founders who are good at Series A, like that initial bootstrap piece, many times aren't great at when they get to $1 billion market cap, right? Because the skill sets fundamentally change. And so you've got to not only have a management team that understands what the execution is in that life cycle, but also not have the hubris to say, I'm going to take this past their abilities. So I did want to stress that. I mean, when you think about the startups, the reason it is so hard is that I know those are three simple macro factors, but in all reality, there are so many outside variables that you can't control, right? And so what I'd say is absolutely, you're going to see more and more capital come into software. So I was joking at a lunch earlier. Certainly back when I was at JP Morgan, software was a nascent market. Like that's the reason a young banker could actually take over a sector, right? Now the competition, both getting capital into software, being able to advise on that side, it is now, one of the largest sectors out there, not just from a GDP standpoint, but from a transactional standpoint. So what I really see is that we need to take discipline into that market, especially in the early stage, but then also make sure you understand where the risks are as you come into that. And by the way, for many of you, I talk as an investor, but many of you may put your careers on the line with those kind of decisions, right? In a lot of ways, that's scarier than me putting, capital into a business, or certainly taking it on as an advisor. And so when you think about it, and you're thinking about jumping to that startup, just keep in mind, make sure you really do that extra work to underwrite the risks and that you understand what the pros and cons are before you move. So.
Well, it's so funny you characterized it with those three risks, because I can't tell you the number of times I've been in a boardroom talking about a major product investment, right, and say, we've done the product research, we know the market's there. This is all execution risk, which is exactly where we want to be, right? We're in control. We know how to execute. That's what we're here to do. And at the end of the day, that's what you're trying to compartmentalize. The other great thing that we spend a lot of time talking about across companies and corporate boardrooms is right way risk, right? So if we fail into a pandemic, that's right way risk, because everybody's going to be struggling at the same time, right? What you can't do is end up putting yourself into a risky situation that your competitors don't have, right? That's where things can get really sideways really fast.
Yeah. Well,
I love the validation, by the way. So that's good.
I validated you in school too. So. Rob, thank you for helping me with that group project. You're so smart.
The sad part is he's not joking.
So what technology should we be watching?
You got to go first. I mean, you're facing such a dynamic
I think
market.
there's two things. Number one, I'm really excited about autonomous, right? Yeah. Not just for the rideshare piece of it. That's just going to be an economic model, but what it means for personal vehicles as well. Personal autonomy is coming into our vehicles in our lifetimes, and people are like, well, what does that mean, et cetera? Because I personally like to drive, probably faster than I should, but I love to drive. And but the use case of this that is really easy for people to get their heads around. Imagine you and a friend want to go out to dinner, have a few beers, share a bottle of wine, you drive to dinner, boom, you leave the restaurant, the car drives you home. And that's what level 4 autonomy is. So when you think about the levels of autonomous vehicles, what you have today in most adaptive cruise control and what we have at GM called Super Cruise going to Ultra Cruise, automatic lane changing, all of that stuff, that's level 2. What I'm talking about, level 4 autonomy, the legal responsibility for the vehicle transfers from you, the driver, to the vehicle. right? So these are major thresholds that are being crossed right now. But imagine what that means for you and just, you want to get some work done, but you want to hit the road to go into Disney World. You sit in the back, you do your work while the car drives you until you're ready to take it over. Those types of things are changing rapidly. The second thing that's really incredible, and we've got this new platform, we're calling it Altify. We've taken all of the software control mechanisms in the vehicle that control critical systems like braking, acceleration, all of that. We've basically segregated them from a software platform. So think about it like a software dome over the vehicle. What that allows us to do is essentially create a third-party developer app environment for the vehicle. So think about what the Apple Store does for Apple. Think about what the GM Store can do for your vehicle. So you unleash basically an entire network of people that can create commercial platforms off your vehicle, whether it's in convenience or it's in customization, et cetera. And we can also send you software updates similar to what Tesla's been doing, et cetera. That changes the entire revenue model of the auto industry. No longer is it
advertised to me in my car then? Is that
well,
we're talking about revenue models?
One of the things, though, so we are working on, it's being tested right now, I think we're in 48 states at this point, is OnStar Insurance. So we have more telemetry vehicle in that vehicle than anything that you can get. So many insurance companies are, download my app, bring it with you in the car, I'll give you a 5% discount. We know who the best drivers are, right? We know who the drivers are that are like me, that it might be a higher risk. So we can actually get into pricing models that save the best drivers tons of money. And we know that. And we can offer it based on the way you've driven your vehicle. Just one example.
Having been with Paul and his vet, I know he has a heavy foot.
I do.
By the way, that's a great segue into, I think I'm going to talk about three trends, but the first is data is the new oil. And so everything Paul talked about comes from the fact that they have access to proprietary data. And the most powerful models where we really spend a lot of our time looking to source, try to find new emerging clients is around this concept of, does the software, going back to that product risk, right? So the software has to work, it has to be scalable, then it has to be a need. But if we can divide, if they have some way of basically creating proprietary data that then they can actually add potentially aggregated public data in as well, and take raw data, structured into information, and then that final piece, which is the insight. And that's what Paul's really talking about, is insight is that ability to create some ROI. And that could be with the insurance company, that could be with the client being willing to pay more. And what we see is that initially the gross margins will be lower in those kind of software solutions, because many times you've got to pay for the public content to come in. Many times you've got to do extra R&D and support. But what happens is the EBITDA margins will expand because you'll lower the churn and you'll increase what you can charge per user or that piece, right? And so what I would say is you cannot and I'm not talking about AI and all that stuff. I'm just saying core data, being able to actually utilize it in ways that we won't even know, right? And Paul talked about a couple of them. And the other piece is I love models that have multiple avenues of growth. So I guarantee you in 1 year, Paul will have 4 more avenues of growth around the data that he's able to collect from that car. And the best part is nobody can take it away from General Motors. It cannot happen. General Motors has a moat around that data. So no matter what a competitor wants to do, they control the future of that data, and therefore they can control how to monetize it and how they want to utilize it. Yeah. So data.
There's a reason that Apple and Google want to get into vehicle manufacturing. It's not because they're, missing out on a, lucrative 10% margin type business with what they do. It's about the data and their ability to do that.
Proprietary data will be the key to future success. If you can control it, you will control your business and you'll be able to survive whatever future waves of headwinds hit, right? So that fundamentally I think is really critical, and it was a great setup as far as the car goes, right? The second, and again, I'm going to be a little more macro here, is I'm going to use an example. So back 10, 15 years ago, IBM, if you really looked at IBM, you would think of them as a hardware and services business. You would not think of them as a software business. A guy named Steve Mills basically went in and said, look, the future is software. And let me explain why. Because if we don't get into software, your hardware is going to be completely commoditized. And without the hardware, the drag on the services are not going to happen. So you're basically going to move into a position where you're going to work your way into bankruptcy. It took IBM a little time because the pushback was, well, we're going to cannibalize the services component. And so what you saw IBM do is they delayed. They delayed in a lot of their acquisitions, but ultimately what they said to themselves is, I want to control where that dollar goes. It's better that I basically keep the dollar by using software, but the software made the services more efficient, so they actually picked it up. That trend is happening all across almost all industries. I'll give you an example. Industrial software, the Siemens of the world, the Honeywells, the GEs. There's a reason you see GE have an advertisement out there saying, hey, if you're a software engineer, come work for us. It's not because it's not a great company and that the brand's not well known, but you don't think of GE as an innovative software business, but they have to be, because what happens is the same dynamic. If Siemens doesn't start purchasing software, all that hardware on the manufacturing floor, all that big services component that pushes through to deploy it into these manufacturing, if they can't get the software right, the SO going to beat them, because no longer is it who's got the best hardware, it's who's got the best software. And so you're going to see, that's why software is going to eat the world. You're going to see more and more money go into software, because that will be the defendable, the sustainable competitive advantage, which I haven't said in like a decade, by the way. But I know that you guys will love it. But that software will be the sustainable competitive advantage that will allow them to basically keep their market share. And then the last piece is, and I'll hold myself accountable. I've had a couple Waterloos in my career, meaning, you know how I look at software as 22 different subsectors. Well, one of them that I should have continued to invest in with my guys is cyber. So I'm not making that mistake again. So we were a little late to the business, or we had rotated out of it because it got mature and kind of quiet, and it's hard for me to make money unless there's creation or destruction of wealth. I need some volatility. Now I need roughly volatility up to the right, meaning ultimately I need creation of wealth. I'm naturally long. I'm not making money short.
That's the ethical banker.
Exactly. I can't. Look, if I could short private companies, maybe I'd do it, but I wouldn't. But no, generally volatility creates transactions, but generally you want growth, right? And the sectors that you go into. And so cyber, I will say it is an arms race. It is the most dynamic sector that we cover. And I see it accelerating. And it's an interesting place from this standpoint. Remember what I said about risks, right? The market, the product, and the execution risk. It's the one area where we have to move, even as agents, and certainly I know the venture capital and the private equity side, you have to move earlier in that sector than you normally would, because to be able to basically play, you're going to have to go with people while the product is still being developed if you want to get any kind of entry point, because what happens is it goes from zero to hero so quick, because if it works well, so what I'd say is it is the most dynamic sector that we cover, but it's also the most difficult to invest in or to bank, because it breaks the model I just talked about. And I'm old, so it's difficult for me to break models. But more and more we're basically saying, with our time, we're going to have to invest earlier than we normally would, so that we can basically find the winners before somebody else steps in and does it. So, but I think it's amazing to me what can be done on the cyber front, both offensive and defensively, unfortunately.
I mean, I think that what's fascinating is all of this is colliding in autos right now, right? Just keep thinking about every piece of this, right? Whether, how much of GM is a software company and how they'll defend that and protect that. What about the cyber risks of a vehicle that's running around San Francisco without a driver? I mean, every piece of this is colliding in your industry.
Yeah. No, for sure. And, cyber is critical. I mean, even if you go back and read about the stories that people took over control of vehicles, right? There's a couple of famous stories of that is it goes into the categories of risk that Rob was talking about. In an autonomous vehicle, that's existential risk, right? That is, customers are not going to adopt it if there's a fear that that vehicle gets taken over, right? So the resources, the care, the isolation, and just everything that you're doing defensively on that literally goes down to whether this company exists or not, and whether or not the product can be proven.
Yeah. I mean, Rob and I were chatting before you arrived, Paul, just to even GM's kind of go to market, even that's changing, right? And the Carvanas of the world and the investments that can happen there, it just keeps changing and changing.
Yeah. So one of the questions I had for Paul was,
I don't know. We had to ask each other.
No. But this is
look, you don't have to answer either.
To be clear, I'm an investment banker, so I have to do a little bit of research before, if I'm I have to have a little something written in front of me. But so GM's got Car Bravo, right? And so I thought that was really interesting because it goes back to this concept of a unique position in the market to be able to create something that you wouldn't think GM would have on its short list of kind of strategic priorities. I mean, I figured maybe you could just talk about that for a minute. So,
I think it's an example, and I think about technology differently. I used to think that, wow, technology came up with this idea. Technology is an enabler,
right?
And technology is allowing people to think differently about everything that they do. So the used car model, you think about the Carvanas, and prior to that, the CarMaxes of the world, hassle-free used car certification. They take out all of the risks and the hassle factor in the purchase decision. And then what you have is a dealer network that is heavily fragmented. They have every incentive to maximize profit on every individual vehicle they get because they don't get as many vehicles, right? So it really is a whole, I'll take a lower margin and I'll just repeat it on really high volume and make sure I lower my costs and create a better customer experience versus I don't want to take the capital risk. I don't have the ability to get the vehicles. Well, what technology enables is we actually, GM, through our GM Financial subsidiary, have one of the largest after-sales markets. We're one of the largest car sellers in the world that you'd never know about because a lot of our cars will either be sold to the dealers or they'll be sold at auction. Where do you think the CarMaxes, the Carvanas of the world are getting their inventory? It's a lot of our products. So what we said is we can figure out a tech solution that essentially defragments the dealer network, allows them to participate in it, and creates a more seamless experience for the consumer. So we're doing a couple of things. Number one, we're leveraging the inventory position we already have through our leasing network and through our financing network. And then second, we're applying the technology and essentially lowering the available pool of inventory that our competitors can have because we're just selling it directly.
Yep.
So it's really a great example of how technology is actually coming in and solving problems that really historically people didn't even really know existed or thought about.
Yeah.
And the great part is, so the build a market, what he just did is he talked about how he builds a marketplace. So for most companies, if you didn't have GM's position, it costs hundreds of millions of dollars because you got to get both the demand and the supply side. So again, it kind of goes back to that unique proprietary position that we're always looking for. So I mean, I thought it was by the way, also when I read about it, I was like, oh, this is brilliant. Because I mean, it's a low risk, high reward, logical way for GM to basically grab margin that they're handing to their competitors.
Yeah, and you get to leapfrog the business cycle probably by about 4 or 5 years. So you look at the stage that Carvana's in, they're overpaying for vehicles, right? Because they've got to take your vehicle away from CarMax or away from the trade-in. So they've got to offer a premium to incent you to do that, right? So they make less money on the top end. They're trying to attract you in the front door. They make a little less money. Then once they scale, then they work on getting their margins back. We get to leapfrog all of that because we already have the lower cost basis in the vehicles coming off of it. So it's a great opportunity to get a ton of data.
And he's got 5 to 6 times the inventory just right from the get-go. So
Well, I want to let these guys have a few questions, but I'll start with just one and then come to you guys. Thinking about your time at Owen and what advice would you give for those that are coming out this year? What career advice?
I went for
The things you did, while you were here, you liked, things you wish you hadn't done.
Yeah.
Find a guy like Rob to help study.
Right. First step.
What I've learned is I should have been charging him. That's what I've learned.
Future royalties. That's what you're looking at.
Yeah, exactly. First off, it's funny, at the lunch, I'm going to say a lot of the same things I've said before. And there was a professor here, Ron Masulis, that really looked out for me. I was a teaching assistant for him. When I got my job, I didn't get my bonus until I showed up in New York. So I actually did a bunch of research for him in the summer. And I bring him up because one of the things he really liked about me is that I would take the initiative. And I think that's critical when you think about where you're headed next. So this will be a little less about Owen, a little more broadly speaking, but ask for forgiveness, not permission. Find ways to do the job that you want to have, even if you don't have it, right? I would say, get away from the whole concept of a fear of failure. If you can, basically, I'm not saying go out there and quit your job, a year after you do and go to a startup, right? I talked about managing risk, but what I have found is that people who are far more talented than I am, many times the thing that holds them back is that fear of failure, right? And I'll go back to the inflection point with JP Morgan. Literally, my closest mentor, he was the CFO of JP Morgan, ended up being the CFO. When I resigned, he basically, he said I was committing career suicide. He's like, whatever it takes to keep you, we'll do that. But what he didn't realize is that that's not what I want. I didn't want to be a senior banker at JP Morgan. And I really wanted to find out, hey, was it the brand or me? Like, could I do something, right? And most people would say, that's a lot of personal accountability. Like, there's this fear factor that says, hey, if you fail, you're going to have to explain that to people. But what I'd say is take the initiative. Don't worry about, like, if you think it's going to be fun, it's something you really want to do, the regret of not doing it, I think, will be much more. I try not to live with regrets, but I would say that if, I look back and there are very few times that I have taken on a challenge and said I shouldn't have done it. Matter of fact, at this moment, I can't think of one, but I'm sure there is a time that I've made those kind of mistakes. So I'd say that piece is incredibly important. I'd say, and I know that you hear this from a lot of people, I truly believe in hard work. And a lot of it is that I don't, when I went up to New York and I sat on that M&A floor, I assure you, I was not the smartest guy on that floor. I know that for a fact, like the competition that I was sitting against, but I would work twice as hard as anybody else on that floor. And the one thing I knew is there's nobody on that floor twice as smart as I am, right? And I will say this about Owen. I was perfectly prepared. Everything they asked me to do from day one, like from the training session to the first model I built, Owen prepared me. There was Wharton guys didn't have an advantage on me because of their education. Harvard guys didn't, quite frankly, Harvard definitely didn't. I'm teasing Harvard guys because I do want to recruit you. So what I'd say to you is I know it sounds simple, right? But hard work really matters. And then the last piece is, I think Paul, I know this about Paul. Like, he actually told me a story about how he and his wife stayed in my apartment when I first moved up to New York. And I do remember Paul from down here. What I will say is that reputation, character matters. I will say that I guarantee you, in our class, no one would say that we weren't incredibly respected, but also, character-driven guys. I know Paul is for a fact. Like, he jokes about the studying and all that stuff. Character matters, right? And really, I'm not saying just reputation is what other people think of you. Character is who you are, right? I think, look, good things happen to good people. And one of the things I did do, and I told you about this before, is I try to have a short list of beliefs that when I have tough decisions that I can always kind of lean back on. And they're only like 5 sentences. There's nothing great about them. But, when you think about character needs to come out when you have that toughest decision. And I'm telling you, if you do a job that matters, you're going to feel pressure, because that's privilege, because you're doing something that people that will make a difference in other people's lives. And to make the right decision, do the right thing for the right reason, you really need a character base and beliefs that you can always go back to kind of drive you. I will tell you, that simple exercise, it makes a big difference. So, and I know that none of that was earth-shattering, but if you really step back, it's really about those things. Like, are you willing to take the initiative, find a way, take accountability, work harder than the other people around you, and realize, look, I'm only going to leave two things behind: my daughter and my reputation, and I covet both, right? So, by the way, before we end this, I do have to say hello to my wife, Tracy, and my daughter, Tinsley. And the reason I did it at the end is I want to see if my daughter actually watches the whole video. So she's going to get a kick out of this, because she's going to say, Dad, why didn't you say something about me? So we'll see if she makes it all the way through.
Well, that's good. Well, I invited my family to come sit and watch, and they opted to go eat lunch. So.
That's how smart. That is how smart his family is. I love it. So.
You said so many great things in there that, every time you say, yep. And I've seen that time and again. I think one of the things that I reflect on a lot is I've had the opportunity to work for some really good leaders. And when I was at Owen, I used to think, I could never be a C-suite person. I'm going to be a corporate finance person, but they're just so smart. They know everything. And I've worked for leaders that at the end of the day demonstrated that, number one, C-suite people are human beings. They don't know everything. You just can't. But they demonstrate a calmness under pressure and an ability to see around corners because they've been pressure tested. But one of the things, and I saw this first in Richard Anderson, who was a longtime CEO at Delta. I see it in Mary a lot as well, is when leaders don't know the answer to a question, and there are more questions that you'll face in business that you don't know the answer to than the ones that you do, they retreat back to their values. Yep. Right? Because exactly what Rob said, because that's who you are. That's your conviction. That's actually why you're in the seat that you're in, is because of those values and the pattern of the decision making and how you've applied them in experiences. And when you do that, you might be wrong in business. You'll never be wrong in leadership.
Right.
Right. And there's a big difference. You can get fired for being wrong in leadership. Some of the best leaders on the planet have been wrong in business a lot.
Yeah.
But they're still really good leaders because of that value standpoint. I've also come to learn that I think the best skills that I'm looking for when I try to hire talent is resiliency and perseverance. And y'all are living at a time where you're building that up, and it may not feel like it. It feels tough, especially on gray days, and we're all masked up, et cetera. You're learning resilience. You're learning that at the end of the day, it's going to be okay. And how do I keep my eyes on the horizon when the waves are too big to see it, right? Because that's what business is. I had a couple of those events last year, and being new to General Motors in the throes of the semiconductor crisis, a lot of my job when I first got there was not, I know how to solve the semiconductor crisis. I mean, I'd been in an auto company for 2 months. It was a lot of, we got this, right? We're all in the same boat together. We know where we're going. We know how the story ends. We just don't know what's from here to there. Let's just do the best we can and keep rowing that boat to the horizon. And that's a lot of that resiliency that you learn through failures and experience. So the advice that Rob gave about don't be afraid to fail is so prescient. One of the interviews that I remember when I first became CFO at Delta, I think I'd been there for about 1.5 years, 2 years. I was interviewed by CFO Magazine. I know you all subscribe to it. It's great.
Great. You got to get it.
Amazing reading, especially when I was on the cover, but that's another story altogether.
He's got a couple extra copies if you need one. I'm
still signing the 2013 edition if you like. But the reason I reflect on that is because the journalist that wrote that asked me, if you could go back in time and change anything about your career, what would it be? And my answer without hesitation was I wouldn't change a thing. Yeah. Because there are a lot of things I did wrong. There are a lot of things I wish had gone differently. Every single one of those things is a page or a chapter in my book of how I got to where I am today. And I've learned a whole lot more from the failures and the things I did wrong than from the pats on the back or the accolades or the investor conferences, because that's what builds you, right? That's how you understand, okay, I'm going to be faced with this situation in a different time. I know I know my playbook. I know where I'm going to go.
Yeah.
One of the best comments I ever heard from a board member came when I was at Delta. It was right after we'd had the big technology crisis that shut down the airline for 3 days. And this board member said, tell me what you're doing to help prevent the next one, understanding that it's going to be completely different than what this is. Right? Because it's not about trying to predict the next thing that's going to shut the airline down for three days. How are you going to react differently to it? And that's what resiliency and perseverance teaches you.
Yeah,
It's excellent.
yeah. I mean, the probably simplest way to say it is look, we all learn more from our failures and our successes, but also the measure of a man is how he handles his failures. Does he take accountability? Does he learn from it? You know, that's the key piece. I would say, for me, when I watch someone fail and they handle it with humility and grace, it tells you a lot about the person, how successful they're going to be, right? So
Questions?
So, you touched on one of the hot button topics of the industry, autonomous vehicles. Maybe curious to hear some thoughts on the other one, electric vehicles. Maybe also think about just more specifically kind of the roadmap to mass adoption. So think about things like charging network, battery technology, chips, et cetera. Just, general opinions on where it is and where it might be in the near future.
Yeah. Well, it's all of that, right? It's an entire network. So there are two, we do survey after survey of customers. We clinic vehicles, and I mean the amount of research that goes in to these projects, because we're putting in billions of dollars for something that isn't actually going to generate revenue for 4 or 5 years down the road. You've got to be way ahead of the curve on the consumer, or even help to set consumer trends. So the big outliers or the big factors that we call EV anxiety pieces are, number one, range, right? So as a general rule, EV adoption inflects upwards significantly at 300 miles of range, right? Customers have told us, I'm not interested in anything less than 300 miles. So getting the cost of the vehicle down while getting range up is the massive economic trade-off. So we, about 4 or 5 years ago, started developing a battery platform. So there's really two ways to build an electric car. You can electrify something that's there. So, this is our forum, so I get to say the F-150 Lightning is an F-150 that they stuffed a battery into, right? There's limitations as to what you can do with that. You can produce it faster, and get it to market faster, but you can't get the range, and you can't do it because the battery is basically made to fit inside the vehicle. Or the second thing you can do is create a platform. So we have what is affectionately referred to as the skateboard, the Altium Platform. So you're riding on the battery is the car. And what it allows us to do is to create the top hat and the environment around it. So we can make a sedan, we can make an SUV, we can make a super truck, we make all these things because the batteries are like Lego bricks. That means that we can develop our Chevy Silverado EV that's coming out in 2023, second quarter 2023. Get your reservations now. We're going to have a vehicle that'll have over 400 miles of range. We'll also have a low range edition for fleet and contractors that don't need that because they're going to job site and back. And we can lower the cost of that, et cetera. But we can create that experience. The second anxiety is around charging speed and charging network, right? So we're actually putting $750 million into a charging network. We've dedicated that capital. We're putting it out there because one of the things that we're able to do is to create a preferred network of General Motors drivers. So I had the opportunity to, my oldest daughter's a sophomore at the University of Michigan. Coincidentally, she took that before I took the job, and she hated me for following her up there, but we've gotten over that. But we had the opportunity when I brought her home from Christmas break, we actually drove down in a Hummer EV, which was great because it was basically me and LeBron, the only ones driving them in America at that time. And that's where the comparisons end between me and LeBron. But at the end of the day, it was all about, okay, I've got to drive 750 miles. I have to plot where I'm going to stop and charge. Where am I going to overnight? So the idea of saying that GM has a network, I can make a reservation at a charging location. I know it's going to be high speed and it's going to get me 80% charge in 40 minutes. That's the type of thing that we need to be able to do because people want a road trip. And the only way we're going to get to mass adoption is to get it to a position where the families that have one car in their garage, it's an EV. Because EVs today are largely comprised of people that are in the upper price points that have multiple cars. So I have my full-size SUV and I have my Tesla, or I have my EV in the garage next to it that I use to go back and forth. But for any hard driving that my family does, because we need it big and we need the mileage and we need to make sure that we can stop for gas, et cetera, I have that. The only way adoption happens is when all that car goes to EV, which is why we've got such a strong pivot. So this goes back to the leadership question that we talked about before. One of the strongest things Mary did is said, we're going to stop producing ICE vehicles, internal combustion engine, in 2035. By 2035, all of our light duty vehicles are going to be electric. You know what that did? It fundamentally changed the question. Everybody in the organization was asking, when do you think we'll go to all EVs? When do you think? How will we get there? When you set a date, everybody's mind shifts to, okay, how am I going to do that? Right? So it's a very different question and a very different problem to solve. And that's what leadership direction can get you.
One more quick question. Yeah.
This was more for Rob, but you talked about investing in some of the deals you do. You kind of talk more about that, especially being, as you call it, the W-2 employee.
Yeah. So, well, the nice piece is when you sell your investment bank, you can make sure that certain other pieces are negotiated. So just to be clear, remember I said ethical. So I always get a waiver from the board before I do it in any form or fashion. And what I really do is, so my wife will tell you this, is that I make money really in a very narrow world, and that is just software. Like if I go outside of software, I am an idiot. I mean, trust me, my portfolio will show it to you. So what I really try to do is, it's pretty simple, is just make sure I don't have any conflict whenever I invest. But what I try to do is I'm constantly, because software is constantly moving and changing, I'm constantly reading up and I'm trying to think about, okay, what trends will work? What's a defendable position, right? And so for me, the things that I really understand are where I lean to. And so when I think about investing, I really love vertical software. So I love nonprofit software. I love GovTech. I love sectors where I can really understand the dynamics. And I know for a fact, again, I don't really take any market or product risk ever. I don't do that because I can't underwrite it. So what I'm really looking for is a situation where I've got an established software business that I believe in the management team, and that first, second, third, I really believe that management team can execute, because nothing ever goes straight to the right. Again, the winner's curse, right? Everybody gets to hear about the big IPO. You don't hear about the 10 years of up and down performance. But the key is that, do I believe there's a defendable position, right, that they can execute on? Also, for me, because I'm an M&A guy, right? So a lot of my investments, when I look at it, I say, hey, they can go it's a fragmented sector, so they can go do roll-ups. So when I'm looking at something, I'm not just looking at organic growth. Many times I'm saying, hey, I know that they can do small bolt-on acquisitions, which will basically be able to accelerate or defend that position. And the other piece is, many times if I do take on something that's a little more risky, I like to structure my way out of it. So I will use a convertible piece of paper or something along those lines. So the key for me, and I think this is the key for most people, quite frankly, is if you stay focused, you can really do well. It's when you get too broad. Because the best thing that I would say is, like, if a generalist private equity, I do not sell most of I can't remember last time a generalist PE won a software business from me, because a generalist PE, it's going to take that. They don't even know the right questions to ask, much less, what the answers are. While if somebody who's all they do 24/7 for X number of years have lived in the software world, there's no question who's going to be able to underwrite it. And if you can underwrite it better, that means that your risk profile is going to be less risky for you, which means you're going to be able to pay up a little more. And the other thing is, if you're in there and your value add, when they hit the wall or they hit that down piece, you can actually give the CEO advice on how to get through it. Because a lot of times, especially as old as we are now, it's scary. Like, we've seen enough cycles. There are some really young, talented CEOs, and I forget that they haven't lived through the cycles that we've lived through, right? When I say .com, I get some, like, people will nod like, oh yeah, I read about that in college, I remember. And I'm like, oh, I remember it very well, and it was painful. And here's what you do, right? So for me, when I think about the investing, it's really about that focus. And all I'm doing is, it's no different than agent or principal. What's the difference, truthfully, right? I'm using my intellectual knowledge and skill set to maximize value. It's just sometimes I'll play it as a principal and or an agent. So it's really no different, truthfully. So
That's great. Well, thank you guys so much for
no, it's good. Thank
two
you.
classmates coming back and sharing some wisdom
I
this
know.
year, Owen.
This is great.
Thank you guys.
We'll see you.
Paul, it's been great.